Transforming compensation: how treating salary as seed money can foster innovation in 2024. Introduction. In 2024, the landscape of employee compensation, especially within the tech sector, is witnessing a seismic shift aimed at fostering innovation and enhancing talent retention. The concept of treating salaries as seed money is emerging, emphasizing the investment nature of compensation packages. This forward-thinking approach is driven by the increasing demand for specialized skills, particularly in artificial intelligence (AI) and data-centric roles, as companies navigate a rapidly evolving technological landscape. Evolving compensation structures. The 2025 Executive Compensation Report by Riviera Partners highlights a notable transition in how compensation packages are structured across various tech companies, including venture capital, VC-backed, private equity, PE-backed, and publicly traded firms. Companies are increasingly adopting equity-rich compensation packages as a strategy to attract top talent, especially in high-demand roles such as AI leadership positions. Unlike traditional roles like Chief Technology Officers (CTOs) or Chief Product Officers (CPOs), AI-related positions command significantly higher salaries and equity stakes. Key insights from the report. 1. Equity-rich offers. The report indicates that base salaries in early-stage VC-backed companies often remain lower, however equity grants average around 1.2%. This strategy allows startups to attract top talent while minimizing cash outflows. 2. Performance-based incentives. There is a discernible trend towards tying compensation to performance metrics, particularly in private equity sectors. Bonuses are increasingly linked to transformational milestones and long-term growth strategies, rewarding executives who demonstrate measurable impact. 3. Demand for AI expertise. Companies are actively seeking leaders who can integrate AI into their operations. This trend underscores the necessity for specialized skill sets that enhance innovation and operational efficiency. Executives capable of scaling AI infrastructure and ensuring the responsible deployment of AI technologies are in high demand, further justifying the premium on their compensation packages. Competitive talent market. Startups and established companies alike face fierce competition in attracting and retaining top talent. To navigate this challenging environment, organizations must adapt their compensation strategies to offer competitive salaries coupled with benefits such as stock options, wellness programs, and flexible working arrangements. Strategies for attracting talent. 1. Clearly defined mission and values. A well-articulated mission resonates with potential candidates. Employees are more inclined to join organizations whose values align with their own. Startups that emphasize their commitment to sustainability, innovation, or social responsibility can create a compelling narrative that attracts like-minded talent. 2. Flexible compensation packages. Recognizing that candidates have diverse needs, companies are increasingly offering flexible compensation structures that combine salary, equity, and performance incentives. This flexibility enhances a company's appeal, allowing it to attract a broader range of candidates. 3. Company culture. An inclusive and collaborative company culture is essential for retention. Organizations that actively promote diversity and foster a positive work environment see higher employee satisfaction and lower turnover rates. Employee well-being and recognition. Investing in employee well-being is becoming a critical component of effective compensation strategies. Companies that prioritize mental health, professional development, and work-life balance tend to experience lower turnover rates. Key initiatives. 1. Mental health support. Organizations must provide resources and support for mental well-being, including counseling services and stress management workshops. This approach not only enhances employee satisfaction but also boosts productivity. 2. Professional development. Companies that invest in employee growth through training programs, mentorship opportunities, and career advancement paths are more likely to retain top talent. Reports indicate that organizations supporting professional development can retain up to 94% of their employees longer. 3. Recognition programs. Implementing a system to recognize and reward employee contributions plays a crucial role in enhancing morale and motivation. Simple gestures of recognition can significantly impact employee engagement and loyalty. Differences in compensation strategies. While the Riviera Partners report focuses primarily on executive compensation trends in the tech sector, other sources emphasize additional factors that influence compensation strategies. 1. NLB Services emphasizes the need for startups to define their mission and values clearly, which is crucial for attracting talent. It highlights that competitive salaries and benefits, along with a commitment to employee well-being, are essential for retaining top talent. 2. Aon's insights suggest that broader technological innovations will impact employee benefits in the coming years, although they lack specific insights into compensation strategies. Future trends in compensation. As we look ahead to 2025 and beyond, several key trends are expected to shape the future of compensation in the tech industry. 1. Increased focus on AI and data. The integration of AI into organizational strategies will continue to drive demand for specialized talent. Companies will need to adapt their compensation frameworks to attract and retain leaders who can navigate this evolving landscape. 2. Performance measurement. The shift towards performance-linked compensation will likely intensify, with organizations increasingly tying executive pay to measurable outcomes related to innovation, efficiency, and growth. 3. Adaptive compensation structures. Companies will likely continue to explore flexible compensation packages that cater to the diverse needs of employees. This adaptability will be essential in attracting a wide range of talent, particularly in a competitive job market. Conclusion. The strategic transformation of compensation structures to treat salaries as seed money is pivotal in 2024. This approach reflects a proactive response to the challenges of attracting and retaining top talent amidst a highly competitive job market. By adopting equity-rich compensation packages, performance-linked incentives, and a focus on employee well-being and company culture, organizations can foster innovation and drive long-term growth. As the landscape continues to evolve, companies that embrace these changes will position themselves as leaders in attracting and retaining the best talent in the industry. Transforming compensation: how treating salary as seed money can foster innovation in 2024. In 2024, the approach to compensation, particularly in the tech sector, is evolving to prioritize innovation and retention through novel strategies, viewing salaries as seed money for growth. This transformation is driven by the need for specialized talent, especially in AI and data-driven roles. Key insights. 1. Evolving compensation structures. The 2025 Executive Compensation Report by Riviera Partners outlines a significant shift in compensation strategies across VC-backed, PE-backed, and public tech companies. Companies are increasingly offering equity-rich compensation packages to attract top talent, particularly in AI leadership roles, which command higher salaries compared to traditional positions like CTOs or CPOs. 2. Performance-linked incentives. There's a growing trend towards performance-based compensation, especially in the private equity sector, where bonuses are tied to transformation milestones and long-term company growth. Executives with mergers and acquisitions experience are highly sought after, receiving substantial premiums due to their ability to manage transitions effectively. 3. Focus on AI and data strategy. Companies are prioritizing leaders who can integrate AI into their operations, emphasizing the need for specialized skill sets that drive innovation and operational efficiency. The report notes that as AI adoption accelerates, the demand for executives who can scale AI infrastructure and ensure responsible technology deployment is paramount. For competitive talent market, startups face fierce competition in the job market and must adapt their compensation strategies to attract and retain top talent. Competitive salaries coupled with additional benefits like stock options, wellness programs, and flexible working arrangements are essential for creating appealing compensation packages. 5. Company culture and values. A clearly defined mission and values play a crucial role in attracting talent. Employees are more likely to align with organizations whose missions resonate with their personal values. Additionally, fostering a positive company culture that promotes inclusivity and collaboration is vital for retention. 6. Flexible compensation packages. Different candidates have varying needs and flexibility in compensation packages. Offering a mix of salary equity and performance-based incentives can significantly enhance a company's attractiveness to a diverse talent pool. Use cases and data. Equity offers in VC-backed firms. In early-stage VC-backed companies, base salaries are typically lower, but equity grants average around 1.2%, allowing startups to attract talent without high cash outlays. Recognition and well-being. Companies that invest in employee development and prioritize well-being see higher retention rates. Reports suggest that organizations that actively support professional growth and mental health initiatives can retain 94% of employees longer. Differences between sources. While Riviera Partners focuses primarily on executive compensation trends within tech, the NLB Services blog emphasizes strategies for startups on attracting and retaining talent through company culture, competitive benefits, and employee well-being. The Aon article hints at broader technological innovations impacting employee benefits but lacks specific insights into compensation strategies. Timeline of events. Present 2024, companies are increasingly adopting equity-heavy compensation packages and performance-linked incentives as a response to the competitive talent landscape, particularly in tech. Future 2025, expectations are set to evolve further with the integration of AI and data strategies, necessitating a shift in leadership expectations and compensation frameworks to retain top talent. In conclusion, the strategic transformation of compensation structures to treat salaries as seed money for fostering innovation is pivotal in 2024, reflecting a proactive approach to attracting and retaining the best talent amid a highly competitive job market. Counterintuitive information. 1. Salary as seed money. The idea of treating salary as seed money might initially sound illogical, as salaries are typically viewed as a cost to the company. However, framing salaries in this way encourages investment in human capital, suggesting that companies should see compensation as a long-term investment rather than just an expense. 2. Equity-rich packages in early-stage companies. It's counterintuitive that early-stage VC-backed companies, which may have limited cash flow, offer equity-heavy packages. Traditional thinking would suggest that higher cash compensation would be necessary to attract talent, but the equity approach allows startups to conserve cash while still attracting skilled professionals. 3. Performance-linked compensation in private equity. The growing trend towards performance-linked compensation in private equity may seem risky, as it ties earnings to company performance in volatile markets. However, this aligns executive interests with company success, potentially fostering a more committed and motivated leadership team. For mental health and employee retention, many companies might overlook mental health support as a key retention tool. But the data indicates that investing in employees' mental well-being can lead to significantly higher retention rates. This highlights the importance of viewing employee satisfaction and mental health as integral to business success. 5. Flexibility over high salaries. The preference for flexible work arrangements over higher salaries challenges the traditional belief that the highest monetary compensation is the most effective way to attract top talent. Many employees prioritize work-life balance and flexibility, indicating a shift in what is valued in employment. 6. Company culture's impact on compensation. It may seem that compensation is the primary factor in job satisfaction, but research indicates that a positive company culture in alignment with personal values can be equally, if not more, important in attracting and retaining talent. This suggests that organizations should not only focus on financial incentives but also on cultivating a strong workplace culture. 7. Diversity as a profit driver. Companies that embrace diversity outperform those that do not by 35%, which counters the common misconception that diversity initiatives are merely compliance-driven or goodwill efforts. Instead, they can be a significant driver of business success and innovation. These counterintuitive insights challenge conventional wisdom about compensation and talent management, highlighting the need for companies to rethink their strategies in a rapidly evolving job market. The report Transforming Compensation: How Treating Salary as Seed Money Can Foster Innovation in 2024 discusses a significant evolution in compensation strategies within the tech sector, particularly emphasizing the importance of innovation and retention. While the report outlines various trends and insights, several key points may be overlooked by readers. Yet they are crucial for understanding the broader implications of these changes in compensation structures. Overlooked insights and their significance. 1. Salary as seed money concept. The notion of treating salaries as seed money represents a paradigm shift in how companies view employee compensation. This approach implies that salaries are not merely expenses but investments that can lead to innovation and growth. By viewing compensation as seed money, organizations can cultivate a culture of creativity and entrepreneurship among employees. This perspective is significant because it encourages companies to think long-term about talent development rather than merely focusing on immediate financial costs. 2. Emerging importance of AI leadership. The report highlights the rising demand for AI and data-driven leaders, who are increasingly commanding higher salaries than traditional executive roles. This shift indicates a broader trend in the tech industry where companies recognize the strategic necessity of AI integration into their operations. The significance of this trend lies in the potential for AI to transform business models and drive competitive advantage. Organizations that fail to adapt to this shift risk falling behind as AI becomes central to operational efficiency and innovation. 3. Performance-linked compensation. The growing trend towards performance-based compensation, particularly within private equity firms, is another critical insight. Performance metrics tied to transformation milestones and long-term growth signal a shift toward accountability and measurable outcomes in leadership roles. This trend is significant because it aligns executive compensation with company performance, incentivizing leaders to drive tangible results, which can enhance overall organizational effectiveness. 4. Flexible compensation packages. The report emphasizes the need for flexible compensation packages to attract a diverse talent pool. This flexibility can include a mix of salary equity and performance incentives tailored to individual employee needs. The significance of this flexibility cannot be overstated. As the workforce becomes more diverse and employees' preferences evolve, companies must adapt their compensation strategies to remain competitive. Offering personalized compensation packages can lead to higher employee satisfaction and retention, ultimately benefiting the organization. 5. Focus on company culture and values. The report underscores the importance of aligning a company's mission and values with those of its employees. Organizations that clearly communicate their mission and demonstrate a commitment to their values can attract talent that resonates with their purpose. This alignment is significant because it fosters a sense of belonging and commitment among employees, which can enhance retention rates and create a more engaged workforce. 6. Investment in employee development. The report indicates that companies prioritizing employee development see higher retention rates. This insight is significant as it highlights the importance of continuous learning and professional growth in retaining top talent. Organizations that invest in their employees' development not only enhance individual capabilities but also build a more skilled and adaptable workforce capable of driving innovation. 7. Recognition and well-being. The emphasis on employee recognition and well-being is another crucial aspect of the report. Companies that actively recognize and support their employees' mental health and well-being tend to retain talent longer. This insight is significant because it addresses the growing awareness of mental health issues in the workplace and the need for organizations to create supportive environments. Fostering employee well-being can lead to increased productivity and job satisfaction, ultimately benefiting the organization as a whole. Conclusion. The strategic transformation of compensation structures in 2024 reflects a proactive approach to attracting and retaining top talent in a competitive job market. By treating salaries as seed money and focusing on innovation, performance, flexibility, culture, and employee well-being, organizations position themselves not only to survive but to thrive in an evolving landscape. The insights outlined above are essential for understanding the broader implications of these changes and the potential they hold for shaping the future of work in the tech sector and beyond. Organizations that embrace these strategies will likely lead the way in fostering a culture of innovation and achieving sustainable growth. Key points for in-depth analysis and discussion. 1. Evolving compensation structures. The shift towards equity-rich compensation packages in the tech industry signifies a fundamental change in how companies attract and retain specialized talent. The 2025 Executive Compensation Report indicates that the demand for roles focused on AI and data-driven leadership has led to an increase in total compensation levels for these positions, often surpassing traditional roles like CTOs or CPOs. This is indicative of a broader trend where companies are recognizing the strategic importance of integrating advanced technologies into their operations. As technology continues to evolve, understanding these new compensation structures will be critical for organizations aiming to maintain a competitive edge in the market. Discussion points. How do equity-rich compensation packages affect employee motivation and retention? What are the potential risks and rewards for companies that adopt these compensation strategies? How can startups with typically more limited resources implement similar strategies to attract talent? 2. Performance-linked incentives. The increasing trend of tying compensation packages to performance metrics, particularly in private equity, reflects a move towards outcome-oriented leadership. This approach not only incentivizes executives to meet transformation milestones but also aligns their interests with long-term company growth. The premium placed on executives with M&A experience highlights the necessity for skilled leaders who can navigate transitions effectively. This trend underscores the importance of accountability in leadership roles as companies seek to ensure that their executives are directly contributing to measurable results. Discussion points. How do performance-linked incentives impact company culture and employee engagement? What specific performance metrics should companies focus on to drive innovation and transformation? In what ways can organizations ensure that performance metrics remain fair and motivating, rather than punitive? 3. Focus on AI and data strategy. The emphasis on AI and data strategy leadership is a direct response to the growing importance of these technologies in driving operational efficiency and innovation. Companies are prioritizing executives capable of leading AI integration efforts, which reflects a broader trend of digital transformation across industries. The need for specialized skill sets to manage AI infrastructure and to deploy technologies responsibly is becoming increasingly critical, making it essential for organizations to reassess their leadership requirements and compensation structures accordingly. Discussion points. What skills should companies prioritize when hiring for AI and data leadership roles? How can organizations ensure that their AI initiatives align with ethical considerations and responsible technology deployment? What role does continuous learning and development play in preparing current executives for the future demands of AI integration? 4. Competitive talent market and flexible compensation packages. In a competitive job market, especially for startups, attracting and retaining top talent requires innovative compensation strategies. Companies must offer competitive salaries along with benefits like stock options, wellness programs, and flexible working arrangements to create appealing compensation packages. The flexibility in compensation, allowing for a mix of salary, equity, and performance-based incentives, can significantly enhance a company's attractiveness to a diverse talent pool. This approach not only caters to different employee needs but also fosters a culture of inclusivity and satisfaction. Discussion points. How do flexible compensation packages influence employee satisfaction and organizational loyalty? What are the best practices for implementing flexible compensation structures that meet diverse employee needs? How can organizations balance the costs associated with competitive compensation while maintaining financial stability? Conclusion: the transformation of compensation strategies in 2024 reflects a proactive approach to fostering innovation and attracting talent amid a challenging job market. As organizations navigate this evolution, it is crucial to analyze the implications of these changes on employee motivation, company culture, and long-term growth strategies. Each of the highlighted points serves as a foundation for deeper discussion and exploration of how companies can adapt to the shifting landscape of talent acquisition and retention. 1. The pay equity movement 2015-present. In recent years, there has been a significant shift in how organizations approach pay equity, especially in response to social movements advocating for equality in compensation. A notable example is the tech industry, where companies like Salesforce and Google have undertaken audits to identify and rectify pay disparities based on gender and race. This movement parallels the evolving compensation strategies in 2024 as organizations recognize that transparency and fairness in pay can foster a more innovative and inclusive workplace culture. 2. The rise of employee ownership 1970s-present. The concept of employee ownership has gained traction since the 1970s, with companies like the Mondragon Corporation in Spain leading the way. This cooperative model emphasizes treating employees as stakeholders, aligning their interests with the company's success. Similar to the treatment of salaries as seed money, employee ownership encourages innovation by incentivizing workers to contribute to the company's growth. The success of Mondragon has inspired other businesses to explore equity distribution as a means to enhance employee engagement and drive innovation. 3. The Google Project Oxygen 2008. Google's Project Oxygen aimed to identify the qualities of effective managers and the impact of management on employee performance. The findings highlighted the importance of soft skills and employee support in enhancing job satisfaction and productivity. This project reflects the shift towards valuing employee well-being and development, akin to the strategies discussed for treating salaries as seed money. By investing in management practices that support employee growth, organizations can foster an environment where innovation thrives, much like the evolving compensation structures aimed at attracting and retaining top talent in 2024. Transforming compensation: how treating salary as seed money can foster innovation in 2024. Future outlook, predictions for 2025 and beyond. As we look ahead to 2025 and beyond, the transformation of compensation strategies in the tech industry is poised to significantly reshape how organizations attract and retain talent. This shift, driven by the growing demand for specialized skills in AI and data-driven roles, will likely lead to several key developments. 1. Continued rise of equity-rich compensation packages. Organizations will increasingly adopt equity-rich compensation structures, particularly in venture capital VC and private equity PE-backed firms, as competition for specialized talent intensifies. Companies will leverage equity as a means to align employee interests with long-term organizational growth. This trend will not only help startups attract talent with limited cash reserves but also foster a culture of shared ownership and accountability. 2. Performance-based compensation will dominate. The trend towards performance-linked compensation is expected to gain momentum. Companies will implement more nuanced performance metrics that reflect not only individual contributions but also collective achievements towards transformative goals. This approach will incentivize collaboration and innovation, pushing employees to engage in initiatives that drive measurable results, particularly in AI and operational efficiency. 3. Increased focus on AI leadership and strategy. As AI technologies continue to evolve and permeate various sectors, the demand for leaders who can effectively integrate AI into business strategies will soar. Organizations will prioritize recruiting executives with proven capabilities in managing AI implementation and fostering innovation. Compensation packages for these roles will reflect their critical importance, often exceeding those of traditional positions. 4. Diversity and inclusivity will be central to talent strategies. Companies will recognize that a diverse workforce is crucial for innovation and creativity. As a result, compensation strategies will increasingly reflect a commitment to inclusivity. Organizations will implement transparent pay practices and create opportunities for underrepresented groups, ensuring that diverse perspectives are valued and rewarded. This will not only enhance company culture but also attract a wider talent pool. 5. Flexible compensation packages will gain popularity. Recognizing the diverse needs of the workforce, companies will create flexible compensation packages that cater to individual preferences. These packages will allow employees to choose how they receive their compensation, whether through higher salaries, equity, or additional benefits like wellness programs and professional development opportunities. This customization will enhance employee satisfaction and retention. 6. Integration of technology in compensation management. Technology will play a pivotal role in shaping compensation strategies. Companies will utilize advanced analytics and AI tools to assess market trends, benchmark salaries, and predict compensation needs. This data-driven approach will enable organizations to make informed decisions, ensuring that their compensation packages remain competitive and aligned with industry standards. 7. Emphasis on employee well-being and development. Organizations will increasingly prioritize employee well-being as a component of their compensation strategy. This focus will manifest in comprehensive wellness programs, mental health support, and opportunities for professional growth. Companies that invest in their employees' overall well-being will see higher retention rates, as employees are more likely to stay with organizations that demonstrate a genuine commitment to their health and development. 8. Cultural alignment will drive talent attraction. As employees seek purpose-driven work environments, companies will need to clearly articulate their mission and values. Organizations with a strong cultural alignment are likely to attract talent that resonates with their objectives. This will lead to improved employee engagement and loyalty, as individuals are more invested in organizations that reflect their values and beliefs. 9. Global talent acquisition strategies will evolve. With remote work becoming commonplace, companies will broaden their talent acquisition strategies to tap into global markets. This shift will lead to greater competition for talent across geographical boundaries, necessitating competitive compensation packages that consider regional economic conditions and living standards. Organizations will need to adapt their offerings to remain attractive to a diverse range of candidates. 10. Increased importance of employer branding. As the job market becomes more competitive, employer branding will become a critical element of talent acquisition and retention strategies. Companies will invest in their brand reputation, showcasing their commitment to innovation, diversity, and employee well-being. A strong employer brand will not only attract top talent but also enhance employee morale and loyalty. Conclusion. The future of compensation in the tech industry is set to be transformative, with organizations increasingly viewing salaries as seed money for innovation and growth. By adopting equity-rich packages, implementing performance-based incentives, and prioritizing employee well-being, companies will create environments that foster creativity and collaboration. As the landscape continues to evolve, organizations that adapt their compensation strategies to align with these emerging trends will be best positioned to attract and retain the talent necessary for success in an increasingly competitive market.